here. Welcome to JHS Interviews. Tonight we have entrepreneur and branch manager for Nations Lending. Eric Estevez is going to be on. He's a good friend of mine as well, right here in Bayonne, New Jersey. So I'm really looking forward to talking to him about not just mortgages, but just life in general and how things are going. And I'm really excited to start the conversation. So ladies and gentlemen, please welcome to JHS Interviews, Eric Estevez. What's up?
What's up, John? How are you? Thanks for having me.
It's my pleasure, man. Thank you for being here. I appreciate it. You're one of these guys that I met here that immediately had like just the energy that I was just like all about. I was like, this is just a cool guy, you know. And we worked together from real estate and with your company and stuff. And it was just I've had you come over and speak, and you've been on my other podcasts and my other stuff that I've done because the energy is there. So I want to thank you for taking the time for being on here. I appreciate it.
No, thank you for having me. I think ever since we met, I love your vibe and energy, and it's all about having that energy around you. So you're definitely one of those individuals. So thank you for having me.
I appreciate it, man. Thank you. So with all that craziness that's going on, one of the things that I always ask people like how they're doing. So how are you doing?
Man, we're doing very well. Very blessed. Blessed that I work in an industry where I could work from home and actually doing better right during this coronavirus times than we were before, and allowed us to do some really positive life changes, man. So we're good. We can't complain. We're working hard, trying to enjoy ourselves, right? So we're doing very, very well. Can't complain.
That's great. So when you say that you're doing even better now, I found that to be like true with a lot of people. Actually, funny enough, they've realized that there were a lot of things that they can do from home. Companies have actually realized that their employees were more productive when they were working from home because one, they didn't have the hour commute or whatever the commute is, stresses them out, right? Coming and going. The expenses and all that stuff are there. So it's been kind of an interesting thing to hear people say that they're actually doing okay, especially if your attitude is right. So let's dive into that a little bit.
Yeah.
And stuff. Where are you originally from, first of all?
I was born and raised in Jersey City. And I moved over to Bayonne, and when I was in 5th grade, I spent a few years of elementary school in Bayonne, but I went to high school in Jersey City, and I went to college in Florida, in Miami. And I was out there for some days, but I'm back in New Jersey. And we have I don't live in Bayonne anymore. I'm in Union County, but I'm in Bayonne more than I'm home, I think, sometimes, right? With our office and our business. So yeah, I'm from North Jersey.
Okay, awesome. And did you find is there a major difference like from where you live, where you live now to Bayonne, and did you make that decision because you just like it over there, or was it what was the reason?
You know what? I always grew up in the city, and I like Jersey City. I like Bayonne. But when we moved to Florida and started our family in Florida, we have a lot more space out there. So we started getting used to that space, right? And we realized that I didn't want to come back to fight for parking because that was never an issue in Florida.
Right.
So we kind of came back and figured out where we were gonna settle. And when we kind of picked, it was kind of midway between my family and my wife's family. So it just kind of worked. And we just love the area where we're at.
Yeah, especially space-wise, when you're talking about space, people that come from anywhere else and end up in New York, they realize, wait, what?
What? What? How come nobody told me about this before?
Yeah. Where's this is the closet, but where's the apartment? He's like, no, this is the apartment. And I've seen those when I was living in New York. We have to.
Well, we're seeing a lot of that right now, though. Like we have a lot of people coming over from New York, buying in New Jersey. So it's like a mass exodus.
Yeah, I tell you, I was gonna. That's definitely on my notes to talk about because that's a very interesting topic. We're gonna get to that. I just wanted to ask you first, with the. How are the rates, right? Tell me a little bit about what's happening in the mortgages, with the mortgages right now, because obviously when this whole thing started, I'm assuming a lot of deals through, a lot of fear it went through people's heads, and they just, or at least they just froze everything and said, we're not doing anything right now until we figure out what the hell's going on. How was it for you during the beginning of this, as far as transactions are concerned?
Yeah, I think in the beginning it was a little scary. You know, like first it was you didn't know how long this was gonna last, and then when things started getting a little bit more serious and things started getting shut down, obviously you have a little bit of worry and angst and figuring out what's gonna happen, how it's gonna play out. But then we kind of figured out that you know what, it's the mortgage and it's the housing industry that's actually gonna take us out of a recession. Right? So it's been great with from a rate perspective. I mean, here's the thing, you know, we right now the U.S. government is trillions of dollars in debt, right? And historically speaking, there's an inverse relationship between national debt and interest rates, and that's where we're at. You know, like the Fed was cutting rates, even though that's not a direct correlation to mortgage interest rates. But what happens is there's a lag when you look at the rise of the mortgage interest rate industry. So yeah, so right now interest rates are at record lows, which is really pushing the masses to refinance to try to take advantage of this. It may be once in an opportunity of a lifetime, right? Where they're going to try to continue to gain wealth through real estate, whether it's saving money on their payments, whether it's cashing out of the equity that they have in their house, whether it's reducing the term on their mortgage so that way they can pay it off faster. So this is actually a great opportunistic time, which for my industry, John, is awesome. And the fact that we can work remotely and my team can work remotely and not miss a beat and still right be able to service our clients. It's really a blessing in disguise, right? In my case, you know, we're cognizant of the fact that during times people lost jobs and people still, you know, are not working and they're collecting unemployment. And we're cognizant of that fact and here to help people as they start getting back on their feet and start working. Hopefully they can take advantage of the situation.
Yeah, and the blessings also is the fact that that industry in particular, I guess like real estate as well, there's certain industries that you realize, you know what, you don't necessarily need a brick and mortar structure always. You may need a place or something, but what I've realized is that a lot of businesses have they've cut down, not necessarily in what they were making, but in what they were spending as far as like space is concerned. They realized they didn't need as much space. So that's also, I think, a good thing for your industry as well, where you can literally run your business through a phone and you know and you're out of your home. Do you still have the location though, right? You still have the place on.
Yeah, we have to, as a branch, we have to have a physical location, right? So we have to give people the opportunities to meet us.
Also, you have to have it though, as a like one of
Yeah,
those.
same thing. You know, I mean, most real estate offices also, right? They have a brick line. I know there's some different platforms that are going digital and whatnot, and we have the financial tech industry where you know they don't have brick and mortars, but we do have one, and I think that it's necessary to have one because listen, in the end, you know, this is the largest transaction when you're buying a house that people in their lifetime.
Right.
And even though the younger generation, you know, they feel comfortable doing everything through email, uploading docs and whatnot, we still have to make sure we cater to those people that want to face to face. Now, I will tell you this: during the coronavirus, a lot more people have been put on, you know, through Zoom and had Zoom meetings and join meetings and all these and my team's meetings. So the cool thing is that you know even people that would like to meet in person, they don't, you know, it's where if I would have said 6 months ago, hey, let's have a Zoom meeting, let's have a FaceTime meeting, they'll kind of look at that a little crazy. But right now, right, it's oh yeah, that does make sense. Why fight through traffic, right? Why go through that where if they want to see me and meet and see my face and so we can talk and just make sure that they see that I'm seeing and trying to help them. A video conference is just as good, right? And it saves time and energy for a lot of different people, right? So, and I've been doing that a lot. And you know what, John? Like when we met for coffee, and then I meet for coffee with a lot of realtors and referral partners, and now it's hey, let's have a Zoom meeting, right? Let's talk, right? And so definitely the industry, this coronavirus is it's helping reshape a lot of industries, not just the mortgage industry.
Yeah, and it's also, yeah, you're right, and I think people are becoming, like you said, um, if I told somebody, you know, you want to buy a house, yeah, let's have a Zoom meeting. so you can
Yeah.
talk and figure out what it is that you're looking for, and I could just make some notes. They're gonna probably look at me 6 months ago like I was crazy, and today it just seems like the norm. And I think that
Yeah.
is helping those industries, a lot of different industries, and it's
Yeah.
also making it people feel safer with those types of relationships, because
Yeah.
this wouldn't have been okay a year ago, you know.
100%.
You know what I'm saying? So that's actually a good thing. Now with mortgages, because there's a lot of involvement with banks and with with other entities and stuff, lawyers and stuff like that. How has that been? How was that for you? Because I've worked with lawyers, and there's a lot of lawyer jokes out there. I'm not gonna give any lawyer jokes, and I know they work hard.
There's a lot of banker jokes too.
Bankers, lawyers. I'm sure there's a lot of real estate
Yeah.
jokes as well and whatever. But
Yeah.
having worked with a lot of those different personalities, it makes it really challenging. Even when I was able to just walk around without a mask, you know,
Yeah.
um, was it challenging for you during the beginning of the coronavirus?
Yeah. I mean, the good thing is that a lot of our industry, we communicate a lot solely through email. Whether it's title companies, whether it's real estate attorneys, and I know that you have older school, right, professionals that rather pick up that phone and talk to you and whatnot. But I think as we progress, an email is much faster and more efficient, right? If I call you, you may not pick up, but if I email you, I know you're going to see that email right at some point and you respond. So I don't think from a technology perspective, I think we missed a beat. We were still funding deals during COVID. Now, so there was a lot of guidelines that got a little tighter because of this uncertainty,
Mhm.
but things were still getting done, right? The things that really slowed up were anything that had to do with being out in the open and being
Yeah,
exposed,
physical stuff.
whether it's appraisers or inspections, or those kinds of things. But I think that we've been transitioning for a while now. I think this just accelerated us a little bit more to make sure that we're more technologically savvy, and those companies that embrace technology and the companies that use, like one of the things that I just recently moved companies, and we're very technologically savvy, and we have team meetings, right, on my teams, and we see each other face to face. Like today, I had a question about a really cool, neat platform that we're integrating to make everything more user friendly, and we're going through this training. And we had group chat. I had a question. The gentleman called me right through the computer. We're talking to each other just like here, logged into my screen, showing me where to go, right? And in a matter of 5 minutes, right, we get things resolved, and there's somebody there helping you, which is so cool, so cool. So it's just great to be part of a company that understands that technology is where it's at.
Technology is huge, and those companies that decide not to really jump into it, they will struggle, because now, like that meeting that you just mentioned, now it has to be scheduled. You have
Yeah,
to figure out when can you go in. You got to
yeah,
bring your laptop so they can show you how to do it when you're there. You
yeah,
know, it's like
yeah,
all this craziness, and now he just did it right there. So that's
yeah,
that's awesome. So let's actually talk about the actual industry of purchasing a home, which I know
yeah.
a lot of people are probably, maybe not. I don't know. I don't know how people are thinking, right? But you know, I've heard that people are saying, well, we're gonna wait to buy a home, or we're moving forward. And again, it's with personality, right? It depends on the actual the couple or the person purchasing whatever it is, and their personality. They're like, gun ho. They're gonna just do it anyway, no matter what, or they're gonna get nervous and stop, right? Is it a good time to start considering buying a home or selling a home?
Listen, the best time to buy a house was always a year ago, right? So it's just because taking
Mhm.
advantage of appreciation and whatnot. I think it is an amazing time to buy a house when you can lock interest rates in the twos. And right here in New Jersey, we're experiencing an average appreciation of about 5% a year. 5% a year. When you're talking about buying an asset that's worth hundreds of thousands of dollars, right? 5% a year is significant,
Yeah.
right? last into the next 3 or 4 years, you're going to have, you're going to gain more equity in your property than if you were to be investing in a 401k that is much more volatile, right? So it's an amazing time. People that are scared now, I think I've always been scared. The prices are not going to drop anytime soon. And what people don't realize is that we're in New Jersey, right? We're in the most densely populated state in the country, across from the financial capital of the world, right? So you have the whole entire world that wants to come into New York City to make it, right? And we're right across from that. Whatever happens in the market, right? We're gonna uh, um, benefit from it just because there's so much demand. And going into COVID, the housing market was strong. I mean, it was on fire. And then, obviously things had tightened up, but right now it's on fire. Now, I will say this, right now the mortgage industry has about 70% more workload, more applications this time of year compared to last year this time, right? And it's a coupling because of the fact that interest rates are so low, and not only people are refinancing, but people are buying, even though with 20% unemployment in the country, right? People are buying because there's so much pent up demand. I like to talk about, I think, in the beginning, you don't know what was going to happen. Is the market going to crash and whatnot? And this is different in 2008, right? So there is obviously there's unemployment. There's some things that are happening that's affecting a lot of families, right? A lot of businesses are shutting down, unfortunately, and whatnot. But when you talk about the housing market in 2008, the cause of the crash was the housing market. There was deregulation. There was no regulation, right? People were getting mortgages that really had no business getting mortgages, right? With all kinds of no doc loans or whatever the case may be. The appraisal values was just all through speculation. There was no real data that were attached to it, and that's why the market crashed, right? But since then, there's been heavy regulation, right? You have to have people like myself that have to be licensed and have to continue to renew their licenses on a yearly basis. That didn't exist in 2008, right? Before 2008. So what happens is that right now, right, even if you look at the interest rates, they've been pretty steady, right? For the last 12 years. And it's because only people that are buying houses really can't afford buying houses are, right? So you have less foreclosures, and they still exist. But what happens is that our population is still growing at a faster rate than houses are being built, right? And again, going back to my original point, we're the most densely populated state across from the financial capital of the world in New York City, and there's always going to be a demand if we're not building, right? There's a lot of people that things change in their family and they're renting, and then their family is getting bigger, they need a house, and right now that's where it's at. We have all this demand. It's a seller's market. It's a seller's market, and the seller's market is when you have very little supply, a lot, and a lot of people buying, right? We're in bidding wars, right? We're helping hundreds of families. This might branch at this moment, right? And we have an office in Bayonne, an office in Fairlawn, and we're hitting, we're doing record numbers. But every time there's a contract, there's a bidding war. Like we're having to talk to listing agents and and say, hey, we were doing a little bit more work to make sure that we're securing these contracts. But the fact is that there's multiple bids per house, right? The sellers are getting what they want and then some because of the demand. Even during this COVID environment, even during 20% unemployment rate in the country.
Wow, that's so crazy. And is it mainly because are the rates lower? I mean, I know the interest rates are lower, but are people selling? You say it's a
just think about it. Yeah, just think about it. If it's a seller's market, and I've had a house, I'm either gonna is driving the appreciation up because the comps go by the last 6 months. So there's pent up demand, and these houses are getting sold above market, above what they're asking. They're looking at the history, and that's what's driving the prices up. So then what happens is that if a seller is going to say, wow, I can sell my house now because I can get top dollar at the seller's market. You know what I mean? Maybe I can get $50,000 more today than I could last year. or 2 years ago. So if you are thinking of selling, right, great time to sell because you're going to get top dollar for your house. And it's crazy because it's typically when it's a seller's market, you say, well, maybe it's not a good time to buy, but interest rates are so low that
Right.
that even if you're buying for a house, for what you think for $10,000, $20,000 more than what they're asking for, it's not going to make too much of an impact on your 30-year time mortgage because the interest rates are so low. But then you're also, as a buyer, you're taking advantage of the fact that that house you're buying, even though you're buying it, you think you're buying it for $10,000 to $20,000 of listing price, that's going to appreciate 5% a year for the next
Right.
3, 4, 5 years. So you're gonna benefit from that, which is insane, right?
So if these interest rates are so low, can they lock that? Let's say they're looking for a house. They don't want to move for like another 6 months to a year, but they want to get a mortgage and start looking for a house. Can they lock down that rate, that interest rate, or does that
No,
does it still fluctuate?
typically, yeah. What happens is you can't. Typically, when you're on contract, right? When you're under contract, you can lock that rate because you could be looking for a house for 6 months, for a year, and rates change daily on a daily basis. And you never know what might happen.
So you have to have
So,
the home.
exactly. So you have to be under contract, right? So we can lock you in for 45 days, 60 days. That way, in case there's any market fluctuation, you're locked in. But yeah, and that's also on a case by case basis.
Right.
Sometimes, I'm an advisor, right? As an advisor, I'll tell somebody, hey, I don't think it's a good idea to lock you in because we can improve your credit score by a little bit. Let's work on improving your credit score, right? These next 2 weeks, 3 weeks, 4 weeks, right? So we can get you a better rate. So in the end, it's on a case by case basis. But I would probably say, as soon as my clients get on the contract, I would say 70% of them are locked in right away.
Hmm. So is this the lowest you've ever seen those interest rates, or have you seen lower than what they currently are?
Well, being that I'm only 21, I haven't. Wait, why? That wasn't a joke. That wasn't a joke,
I'm
John.
sorry, I don't know why I was laughing.
No, but it's I'm 39 and I haven't seen rates this low. Maybe there were. Listen, the last 42 years, right, which is older than I am, right? The last 42 years, the average interest rate has been 8.42%. 8.42%.
That's
Right now,
average.
you can get something in the twos, right?
That's crazy.
So, but in the last 42 years, I think, in the last 12 years since 2008, they have been pretty steady, right? Talking
Right.
about threes and whatnot, right? And I think, year and a half ago, you started them creeping up a little bit higher, but they came back, and now you're talking about, a two. Like this, it's possible that, that somebody can probably get something in the high ones, 1.99 right now, right? Depending on the circumstance and individual, and that's something that I want to tell people as well, because I get these calls all the time. Hey, what are the rates? And that's a loaded question because it depends on the individual. You can Google, right, rates today, and that's going to give you your unicorn borrower, the unicorn buyer with 800, plus credit score. Is it a single family residence and whatnot? There's a lot of different things. Are you buying for an investment? Are you buying a single family, multifamily? What kind of programming you look at? You look at eventually you're looking at an FHA, at a VA. So what happens is that, right, interest rates are based. There's a starting point, but then the banks are going to lend you money based on risk. How risky is Eric? How much risk am I taking and letting Eric borrow $400,000? Right? They're looking at my case. They're looking at, okay, well, what's Eric's credit score, right? What's his debt ratio? So there's a lot of different things that the banks look at. So
Right.
I tell people all the time, hey, listen, you know what? The rates are great. So comparatively speaking, you're going to get the lowest rate today that you would have in a very, very long time. But it depends on the individual.
So they can't go online and see the rates and be like, "Oh wow, let's get this house at this rate," and then come up and
Yeah.
enforce on you that they want that interest rate, but then their credit score is in the 500s, and they can't even buy
Yeah,
that.
and that happens all the time, right? But you know what? It's their first time. A lot of these people are first time home buyers, and that's what I'm here for. That's what myself and my team are here is to educate. So when somebody says, "Oh, I saw that," somebody posted a 1.99% interest rate, that doesn't apply to all, right? That's like a unicorn rate. That is it possible? Absolutely. right? But still, right? Even if you have a score in the 620 plus, 580 plus, like even if you're at a 580 credit score, you're gonna get you can get with us, and a lot of banks are not doing 580 credit scores. With direct lenders, we're doing that. But even with at a 580 credit score, you're gonna get something in the fees, which is insane, right?
Right.
In the end, it's great time to buy, no matter what, and whether it's a 2% interest rate or 3.5% interest rate depends on individual, and you don't wanna say I'm gonna wait for rates to get better because you never know what can happen tomorrow.
Right. And when you're talking about like financial, talking to people about it is the biggest purchase they'll ever make,
Yeah.
maybe, in their life, right? Generally, that's what it is. So when you sit down with someone and how do you go about? And the reason I ask this is because I know that, we've had to have the conversation as well, with what we were looking to do is, my family and stuff. And when you have these conversations with a mortgage person, it is so important that there's some sensibility on the side of the person that's telling you, well, this is where it is. You can't get this, but you can do this. That kind of thing. What's your approach when you're dealing with like a family that comes to you and they're really interested in getting a house, but right off the bat that that there's work to do. Um, that work, what is it that you tell someone that you have to kind of work on? Because I know people out there want to sit down in front of somebody, but they want to feel comfortable, they want to feel acknowledged, they want to feel that they're going to leave with, if they can't do it now, but with a solution moving forward.
Yeah, I mean, I think that's what we pride ourselves on, is educating people and helping people, nurturing clients, right? I mean, we love when somebody calls us today and they can buy a house today, get into a contract tomorrow, right? That's great, but that doesn't always happen. So, our job is to educate people. I work a lot in our communities, and a lot of times people have issues with credit, or maybe they don't have the down payment, or maybe they're self-employed and they don't report the income that they should be reporting, right? Because it's going to benefit from a tax perspective. That's hurting them from being able to get loan funding. So our job is just to look at every situation different. Everybody has a different story. Everybody's goals are different, right? People might say, you know what, this might be a starter home. Maybe I just want to buy a multi. I'm done in the multifamilies. I want to buy a single family. So what happens is that we have to listen to where people are at in their life. And you know what? I'm constantly working on myself as an entrepreneur, as a professional. I've gotten, from the minute that I joined this industry, I've had some kind of coaching or another and mentors, and I have that today, and I'm constantly trying to work on myself. And the one thing that I'm really, you know, hearing from top producers, from the number one loan originator in the country, is you have to be more than just a transactional, mortgage lender or mortgage broker. And you have to kind of know people's life and where they're at, because you can technically be that person's, lender or advisor for the rest of their life and children and whatnot. Because you want to make sure you put them up and put them up in a program to be successful for them, right, and help them, and they know that you have their best interests in mind. That's when the referrals come in. I'm so blessed that I haven't even been doing this. John, I think September 11th is going to be the 3-year anniversary where I've actually passed my test. But it feels like I've been doing this for 10 years, right? And I went from not knowing anything less than 3 years ago to managing a branch that in a few short years will hit $100 million in production, and and having when it was just myself and my father, working on a few loans at once, to having hundreds of thousands of dollars of staff that report to you, and you building that. And it's great to see that being built. And I think a lot of that comes from the fact that we see ourselves as not transactional coordinators, but we see ourselves as life, business partners with these individuals, and they
Right.
see that. So that's how we've been able to grow at a fast pace.
Yeah, it's like a financial life coach in a sense. You know, you're there to not
Yeah.
only help them buy the home, but you're there to also nurture them and make sure that they're happy. Just a quick question from Matt: does Eric do commercial real estate loans? I don't know.
I I do, yeah, I do commercial. So Matt, that's a great question. We primarily function with residential, and we fund our own loans. We process our own loans in house, underwrite our loans. We service 98% of our loans. So 90, so that's where we're at now. When it comes to non-QM loans, when it comes to commercial loans, hard money loans, right, and some maybe off the wall. That's when I wear my broker hat, right? That's when I leverage my relationships. I do commercial loans, but I act as a broker. And I say, okay, well, what investors, what banks will have relationships with? I package the deal, I shop it around, and I'm able to try to get you the best terms. So I do commercial loans, even though I would say it's maybe less than 10% of our business.
Cool, cool. So Matt can reach out to Eric Estevez, thelender.com there if you have any more questions on that. So let's talk a little bit about, you mentioned having mentors and, one of the reasons why in the 3 years you've, reached and you've been successful is because I've seen you hustle. I've seen you go to seminars, you go to workshops, you always talk, you're always online, posting positive things. You send that Monday morning update, that I always
Yeah.
get and stuff. And I do read it, believe it or not. Drinking my coffee, I'll read it. And so it's because of that consistency that you do that you reach that. What advice do you give? We're gonna go back to mortgages as well, but I think we've covered a lot of that. I want to kind of transition a little bit to the entrepreneur, Eric Estevez, and the kind of like the work ethic that you have and that process. What's one of the things that you would actually recommend to someone who's interested in not necessarily just mortgages or getting involved in that, but starting a business?
Yeah, listen, I think I believe in aligning yourself with individuals who've already been or done what you've done. Listen, the best learning is going through it yourself and making mistakes. But when you have a mentor or someone that you look forward to and talk to that's already made the mistakes that you've made, you can at least flatten that curve. So and a lot of people, they say, oh, I'm not, realtors that I know, or I can't, I'm not producing, I gotta sell some houses, but first. So and I get that, but listen, from day one that I started this industry, I've paid for coaching, right? Now there's different levels of coaching, but that's helped me, because why am I going to reinvent the wheel?
Right.
And then maybe if it's not paid, align yourself to a team leader, align yourself to someone who's going to take you under their wing. If you're new in the business, what can you do? How can you learn? And listen, there's gonna be sometimes time that you put in that it's not gonna be money right now. And I think that honestly, John, right, that's where most people fail, is they want instant gratification. Let me tell you, talk about motivational story. Like that, I remember I was 24 years old, 25 when I started making a six-figure salary. Which I felt pretty good about. But I was one of those go-getters. I wanted to make $1 million, but I wanted to be a millionaire by the time I'm 30, right? And I had a family young and whatnot, and ever since then, I always align myself with a mentor. And I tell this story because I've earned a six-figure salary for most of my working career, and I left that 3 years ago. And I want to say, listen, I was working for long hours, whatnot, but there's a lot of things that kind of the universe was telling me, Eric, it's time for you to go. And I left all that for a commission job I didn't know anything about. And I had family to feed, I had mortgages to pay. And talk about, I jumped in, man, and I think I am where I am today because of that struggle. If I didn't jump in, maybe things would have been a little slower. I would have given up and gone back. But because there was no turning back, you talk about hustle, yeah, man. I 5 in the morning, I'm hustling. right?
Right.
I went on vacation last week. I was up at 6 in the morning. I usually wake up at 5. I was up at 6 because I was I slept an hour extra, 6:30. And while everybody was in the house sleeping, I was rocking. I was working until 9:10. When everybody woke up, all right, let me log off, right?
Right.
But I was still rocking, and then I was so busy that I worked. I tell people that 5 to 9 a.m. I get more done than 9 to 5. Well, on Monday was one of those 5 a.m. to 9 p.m. nights. And I rocked it. And during COVID, I would wake up, and instead of traveling and doing these things, right, and deals were falling through. I wasn't as busy, so I used that time to get to do more training in my coaching platform, right? To meet more people, to go to as many Facebook Lives, to go to as many trainings as possible. And I learned more about the industry, and I made a big decision to leave a company, right, in a short time frame because I became so much more knowledgeable about the industry. And that's okay. This is my next move. I think I'm gonna align myself with this company. I see where they're going. And I studied that during the COVID. So I'm always a student of the game, and I'm still constantly learning. And we're at a point now where we're growing at such a fast pace that I feel like, man, I'm growing such a fast pace. The service that helped us get to where we need to be sometimes is falling through. That communication that I usually have is falling through because I have 10 times the loans that we had before. So now I'm like, okay, what do we got to do? I got to hire more people because I don't want to lose what helped us get there. So my biggest advice is align yourself with someone, get coached, invest in yourself. I bet you that if you spend $200-300 on a coach or whatever it is on a monthly basis, that's a few nights out a weekend, right? And I know you want to go hang out and drink, but you know what? Invest in yourself. And listen, it hasn't been an easy road. But the trajectory where I'm at is far surpassing my imagination, and it's going to be, financially, gains are going to be much more than where I was making a six-figure salary in my prior positions, right? So, and I'm able to control my time now. Listen, you know me, family knows me. I'm a hustler. That's who I am by nature. But my job is to, at least when my work is being put out there, I want it to be a ceiling. That's what I love about this industry.
Yeah, it's really amazing about how important it is to have a mentor, a coach, someone, and it amazes me that people don't value that. And like what you said, they'll spend money on things that I know is not going to provide them any kind of, it's not going to move the needle forward for them in any way, but it brings them some sort of satisfaction that they have this whatever they bought.
Yeah.
But that to me is like always an amazing thing. So do you are you lined up to like continue? You just started with the Nation Lenders, right? Nation with
Nations lending. Yeah.
Nations Lending. So are you lined up to kind of like continue with, like, you're totally happy with this company? What was it about them that really made you want to align with them?
You know what? I like to join waves, right? And this company um, has continued to be ranked one of the fastest growing mortgage companies in the country. And when I spoke to leadership, everyone is aligned. They have the same goal in their vision. They want to be a top 15 lender in the country. It's great when you align yourself because they invest in people and the energy is there because everybody has the same goal. And the fact that, the company was started in 2003. And the fact that they're in all 50 states. Last month we had $1 billion of applications, $1 billion in applications for the month of July. We closed, I think, 1,700 loans as a company. There's $500 million branches that are bigger than a lot of companies that are out there, which means that they have the formula, right? They have they're figuring it out, and they're not a perfect company. Nobody is, but we're working together to figure out what can we do to provide the best service and to be the best lender. I was talking about a training today that even during this craziness and everybody's just overwhelmed with the pipeline and we're just bursting at the seams, they're still integrating trainings to figure out how we can do things better.
Yeah.
And I think a lot of companies would say, we're too busy. We gotta wait until things die down. But I know this is going to be a growing pain. We're going to learn this, but it's only going to make our jobs easier. It's pretty cool, right? And when you have a vision like that, people believe in you and the team, and we move forward. And I think the technology that they have is unparalleled. The marketing opportunities that they have is unparalleled. Not everybody takes advantage of those things, but the fact that it's available is just great. It's great. I have Facebook groups with realtors and counting where I'm working with different brokerages and different teams, and we're providing free leads to realtors, and I just started that 2 weeks ago, and we want to build it where we have several teams and several people working with them. I sign originators to them, and we're just being able to provide value to realtors, not only in the terms of leads, but in any other way, right? So it has a lot of cool things that we can offer our referral partners, so we can continue to grow.
Yeah, and just to touch a little bit on what you mentioned about, during adversity and when things are like really bad, there's so much opportunity for people during those times, and I think the fear really squashes people. You can become affect to it and not do anything, or become fear, or you can actually find opportunities. And so many people make so much money during a crisis, and it's just because they understand that the crisis will pass, and when it does pass, they want to be better off, either educated,
100%.
spiritually, whatever you're. But that personal development is so huge during a crisis. So that's like totally important.
Yeah, I think what I see these memes about 2020, and go home 2020, you're drunk, right? And a lot of weird things happen. I get it, but I'm gonna remember this more so that it was another pivotal moment. I think 3 years ago was a pivotal moment when I left corporate to kind of do my own thing and be my own boss. And this is another pivotal moment that I remember forever, because I think I got so much better as a professional entrepreneur, and I made a change, and I think it was a life changing change. And I think that I'm gonna remember this. I'm gonna say, hey, you know what, 2020 was a crazy year. I'm not blind to the fact that it affected a lot of people in a negative way. But for me and my family, I'm taking nothing but the positive. It was a pivotal year for us.
Yeah, and that's where all that mentoring that you received, it gets you to that mind state. It's like we have Neil Carroll, who's our first ward councilman.
Yeah, what's up, man? Good seeing you.
And asset to Bayonne. I hope you and your family are well. Very good.
Awesome. Me too, Neil.
Neil is a great guy also. And we have a question here from Matt Briggs. He says, Eric is incredibly motivated. So do you have any tips to offer, like goal settings and staying persistent?
Oh, Matt, thanks. Great question, man. I am one of those guys that I love goal setting, and I wake up at 5:30 in the morning every day, and I have these are my plan. Look, these are some of my planners. These are some of my recent planners. So I go through, and every page of these planners are filled up, and I use my planner, right? It's called, I think it's my best self guide planner, and I wake up every morning, and that's the first thing I do. I get focused, and I plan with a clear head. I write down, right, what my goals are for the month, for the quarter, and I hold myself accountable on a daily basis. I write down what my goals are. If I know that I want to close professionally, if I wanted to close X amount of loans in the month, how many people do I need to talk to, right? If I want to talk to how many different people, how many events, how many connections do I need to make, how many phone calls? You got to break it down. You got to compartmentalize it, work backward, and I always start big. Say, what's my goal for the year, and then start bringing it down for the month and even for the day. And you know what? I think I've given classes on goal setting to realtors and whatnot, to some partners, and this is key, because a lot of times what happens is we have a big goal, and we usually set it at the beginning of the year in January, right? We have these goals, but then we don't break it down and work backward. And the real meat is in the daily basis, because if you know that you haven't done what you need to do for 2 or 3 days, then it's going to be tough for you to make your weekly goal. Then if you don't make your weekly goal, it's going to be tough for you to make your monthly goal. So I think getting however it is, whether it's on your phone. I use my phone, for very. I have a calendar on there. I'm very organized with the stuff, but I write things down because when I write things down, I remember, right? And then when I'm looking at it, I can say, "Wow, man, yesterday was a crappy day. Like, what the hell did I do? Like, did I watch Netflix all day, right?" So then it just says, "Wow, I'm behind," and it just pushes me to go out there and go after those goals. So I think getting yourself a plan. Go to Barnes and Nobles, order one on Amazon. I'd be happy to share the book that I use. I've given this to some partners of mine as gifts, and I really think that's key. Writing things down on a daily basis and holding yourself accountable to that.
Yeah, I want to see that myself. There's a certain power to writing something down. It's like you're putting it into the physical world. It exists now because it's not just floating in your mind and in through space, but it's written down on paper. And they always say, write it down, especially when you have goals like that, like big goals, right? And think big as you can, and then reverse engineer how you're going to get
Yep.
that big goal and figure those things out.
Yep.
I have books all. And I showed you my book that your name is in here.
Yeah. The green book.
The green book, then you can't see because it actually
Yeah.
disappears
Yeah. Yeah. Yeah.
in the green
Yeah.
screen.
Yeah.
Yeah, so writing it down, and I definitely would like to hear the name of that because that looks actually like something that I would
It's
definitely
called.
buy.
It's called the best. So it's called the best self journal. The best self journal, and they're not the cheapest things in the world, right? But you can go and just Google it, right, and go on the website, and it's cool because they break it down, right? They break things down by like by month, by quarter, and you just write it down, and you're saying, okay, if you write it down on a daily basis, you're saying, wow, am I heading in the right direction or am I heading in the
Right,
wrong direction, right? And what are my goals? You know what? This is one of my ultimate goals is when I was younger, I had the opportunity to study abroad in Japan. I went to I was 17. I won a sales contest. I went to Venezuela. And I was like, wow, this is what I want to do. I want to travel and experience more cultures. And you know what? Even though I graduated college early, I also had a baby early, right? My wife was pregnant while I was getting my diploma, and I had to start working. I had to start working right away, and now my kids are a little older, so I'm like, all right, you know what? It was on pause for a little bit. I'm taking it right back, and what I'm doing is I'm gonna work my goal where I'm gonna reward myself with a quarterly vacation, no matter what. Now the quality of the vacation, right, is going to be dependent upon that I meet my quarterly goals, right? Am
mm,
I going to take just a weekend off, right, in the house, right, or am I going to catch a weekend flight, with my wife in Miami or wherever it is, or am I going to go for a month in Italy? We're trying to go next. One of our goals is in the summertime, so to go with family and a month in Italy where I can work from there, and start doing the things that I've always wanted to do, and putting that as a goal, right? It's my goal. What can I do and go those things? So that's always something I've always wanted to do, and I can't put it. I can't continue putting it away. But I got to reward myself with hard work that I do.
absolutely, and you definitely are doing it. So what's one of the biggest challenges that you have right now? As far as like reaching those goals.
Great question. I think it's trying to balance the business. And you know what? I wouldn't even say right now with family because before I felt like when I worked for a company, I was always giving my time to that. Right now, what I do is for myself and the company, my family. So I can do this from my home office. When my son is outside playing, PlayStation 4, and I can take a break and talk to him and see how it's going. And I feel like I'm much more present now, right, than I was before. Even though I might work 12 hours a day, but I feel like because I'm around my kids, I know what's going on, right? It's I'm more present. But I think the balance really is to find that formula because we're growing at a fast pace. I'm so thankful, but I have to make sure that I service my filter partners, that I service my clients, with the same vigor that I've been known for, and I don't want to lose that, right? So I have to do a better job, and we're doing it. Just continue to hiring in front of business, so I'm able to delegate and able to still provide that service to my partners and to my clients. So right now, that's where we're at. We're hiring and training and just trying to balance it, right? And I actually posted a video this morning, John, just thanking everybody in the real estate industry and just saying, hey, you guys are working very hard. It's a tough time because we have a lot of volume. Let's work together, be patient. No reason why we yell at each other. We miss a closing day by 3 days or by a week or whatever the case may be. As long as we know where we're at and we're working together, because it is a tough time. The whole entire industry is overwhelmed with business, and it's
Right.
not like they just got all these extra bodies, right? Trained bodies all at once. So that's where I'm at. I'm servicing my clients, but I'm also managing a business, training a team, growing a team. So it's really managing all those parts. But we're not too far away from being where we need to be.
Hmm. And I have one person. I just want to say that says your last name sounds familiar. Hmm.
That's my cousin.
I know. I know.
That's
I
my
know.
cousin. How are you, Admi?
That's cool. So here's a question. What's one of your selfish kind of goals? Like one of not family, because we all want to obviously support our families. But what's something that you think that, and not selfish in a negative way, but just kind of like it's something for you? What is it that you work towards that you kind of want personally? That's not, building with the family and making sure that they're well. We all now we take that for give. We know that that's going to be the number one thing. But what does Eric think? What does Eric want that he works towards that it's like just for Eric?
Yeah, that's a great question, and I think that's always something that we're always thinking through. But I've become a lot more focused with what I want, because when I'm focused and when I'm clear, it's I hold myself accountable to that, and I just say, hey, this is what I like. I have a place where, hey, to maintain the quality of life and to achieve the goals that I want, myself, like, we have to earn X amount of money. But then my goal is to every single year earn that by doing less and being smarter, right? By delegating more, whether it's investing more, whether it's buying properties and diversifying your assets. So because what happens is that I don't want to keep on working for more. If you keep on working for more, like, what are you doing this for, right?
Right.
Like, you can't take money with you to the grave, right? The Egyptians tried it and they got robbed, right?
Like
Just got
within
robbed.
10 years.
So what happens? So what happens is that it's about, okay, this is where we're at. What are your goals, right? And then work backwards and helping other people start achieving those things. And that's really what's fulfilling for me is okay. This is what I learned in the last 3 years. Can I teach other people to do the same, right? In their own pace or whatever the case may be, and just really doing less and being able to spend more time controlling my time and trying different things, because that's one of the things that I'm at. Like, I'm always thinking, and I think I'll get bored if I don't have new challenges in my life. So my personal goal is to get to a certain lifestyle, and each year just invest in being able to do less and less, and not having to work 5 to 9 p.m.s, right? 5 a.m. to 9 p.m.s like I did on Monday. You know what I mean? So and I'm always gonna. That's just who I am. But I rather do that and take my energy to something that's new and exciting for me. And you know what? And this is a selfish plug, but one of the one of the one of the things that kind of led me to this entrepreneurial path is when I was investing, I was getting bonuses, and I was figuring out what we're gonna do when I was working with corporate. And my wife and I, we wrote a children's book, according to Chacho, right? So we said, hey, we're gonna write a series. Let's write a series about our dog Chacho, and we wrote a book. We have the first book out, and then then I went ahead and I changed into this industry, and it's kind of taken over my life. But we were on vacation. We had a house in Pennsylvania last week, and we were just hanging out. And we were like, wouldn't it be cool if we just travel every year to a different place and write a new book every year? This can be like a passion project. And that's what I want to do. Like, I want to be able to pursue passion projects like that, and have a series about our book, because it's about our family and we enjoy it, and it's about a dog who we love. and we'll be able to tell stories. And that's something that we want to continue doing is publishing different chapters of these books.
I love that. That is so freaking cool. I didn't know that. That is so freaking cool.
Yeah, according to Chacho, yeah.
According to Chacho. I love that. So Almi is saying, I love seeing your success. Kudos to the Estevez business owners. That's right. Thank you very much.
Yeah, so, shout out. You know, she's mentioning, you know, Estevez, like I'm here because my pops has been in this game for a long time. Esteban Estevez, he's been doing this for 30 years. And when I left corporate and I was investing in real estate, I thought I was going to flip houses, and I realized this isn't easy. And I actually had a failed flip. Right, it was like a high end house, and I was like, this is crazy. But and we're going to continue doing it. But that's how you learn. But the fact is that I didn't know what I was going to do, and I said, you know what? My pops is a lender. Let me get my license. I'm going to learn from him, and I'm going to use my experience in building teams to do that. So she just quick shout out to my pops, Esteban.
Absolutely, that's awesome, man.
And shout out to my mom, who's also one of our assistants. Who's also so I see my parents every day, and we're working together. But so it's cool that I'm actually spending time with my family, more time, because we have a business together.
Yeah, so that's beautiful, because you've really kind of like managed to have the best of both worlds, where you have your business right there with your family, like you said, when you expressed how you were working, and you can go back and just talk to your son to see how he's doing, and then come back, even though you're working long hours, and I know what that's like, where you work long hours, but you're home with the kids, and it kind of feels like you're more present for them. And so many families don't have fathers that are there, or mothers, because they're out working, whatever corporate hours are. And it's really a great thing what you're doing. So congratulations on that for sure. So any final words that I want to, let people know where they can find you? Any final motivational words for our audience? And then we'll wrap up. It's been an hour, believe it or not. Imagine how quick that flies by.
Yeah, listen, guys. I guess just going back to my industry as a mortgage professional, now's a great time to just evaluate where you stand, if you're a homeowner or not. It's a great opportunity to propel generational wealth by either purchasing a home, or revisiting, getting a mortgage check to see if you can, how you can look at your current situation, how you can save money, cash out, pay debt, lower your terms. It's a great time to just check in. So give me a call. You can reach out to me. Friend me on Facebook, Eric Estevez. Go to my website, ericestevezlender.com. Shoot me a message. Myself, my team will be able to assist you, and we hope to be part of this journey with you.
Awesome. So, Eric, I want to thank you so much for taking the time to being with us this evening. It's been a pleasure. We learned a lot, and also the motivational element of your journey is really incredibly motivating and inspirational. So I want to thank you for sharing that with us. And I hope you come back again at some point in the near future, and we'll do it again, man.
You're the man. I love your hat.
Thanks, man. Yeehaw.
And I saw you. Let us know where we can catch you in that film you were featured in. That just got. I saw you just posted that it was nominated for an award or a show, a festival.
Yeah, I just got accepted into a festival, the Houston Comedy Film Festival. So that was exciting. Yeah, so we'll have more about that. At some point, people will see that film, which was actually a lot of fun to shoot. Actually, it was a lot of fun. Yeah, definitely, I appreciate that. Thank you, man. Cool. All right, we'll talk soon, Eric. Thank you.
All right, brother. Thanks for having me. Bye.
You got it. All right. So that is Eric Estevez. I mean, what are you going to say? The guy just got all, he's really, what it is that he's organized. He's got, look at all the books he's got, the journals and stuff, right? I mean, that's like somebody who's really organized and really making it happen. So it's just really inspiring to see somebody doing it. And it's really awesome. So hope everybody got some value out of that. I know I did for sure. If you like these interviews, please subscribe to my channel. And also hit the little bell to get notifications, and also share it as well. So thank you very much. See you all tomorrow night at 9:30.